Hey guys, welcome back to this YouTube video. So this episode, we are going to cover support and resistance in the most detailed and well explained as I can say. So as you all know, I am a fan and a supporter. As a matter of fact, I really admire Nick Shawn. He is a forex trader and he's been around for about 8 years or 7 years, something like that. And he's been trading support and resistance since then. And he's somebody I really look up to because I personally trade support and resistance, nothing else. So that is one of the reasons why, and he's very true. And let me say, he's somebody that I can say, yeah, he's amongst the realest, like the realest traders. That's one of the most realest traders that I know personally online. You feel me? So he's somebody I really look up to. So this video is about, breaking down support and resistance in the most understandable way, in the most way that anybody getting in, anybody who's new, a complete beginner can understand support and resistance and be able to treat them and knows exactly what to expect at certain point in time. I'm going to cover top-down analysis. I'm also going to cover optimal entries. We're also going to cover how to manage your trades actively as the trades run. All right. But I'm not going to give you guys all the juice and all the results or everything, entirely because I have a course for that, of course. I make an extra buck from that. So there's no way I'm going to give you guys all that juice for free. But I'm going to give you guys what you can actually start off from. If you're a complete beginner, start here, get an idea before you go in for a course. You feel me? So that's why this video is here. Now, my name is Ghislaine, and if you're watching my videos for the very first time, consider subscribing as this will be one of the most educative content you will find online. So in this channel, it's a very small channel, but we share trading tips to help better your trading. Now, let's get right into this video. All right, so this is Euro AUD on the 4-hour time frame. So support and resistance works best on the large time frame. Please, whatever I'm teaching you here, right? It's from my own, it's my own point of view. It's my own perspective. It's how I personally trade. I'm not contradicting any other person's trading. I'm not contradicting any other way. If you've been trading your own certain way, please don't watch this video because it might just change your. All right, don't change the way you trade. Right now, let's get right in. So I usually start my top-down analysis from the weekly time frame. Yeah, I'm also I start from the weekly, so I'll just enter here and I'll go straight to the weekly time frame without having to look at anything first. Now, what I really do on the weekly here is I try to see where the market is heading. Right now, looking at this, we can see that this market has been holding up this area kind of in an uptrend, but a very weak uptrend, as you can see. Then the market had this dip to here. The market had this dip, then started took a structure here and started rallying to the upside. Now with this info, I know that okay, the weekly here is looking bullish. Now I want to work out a trend line. If I can work out a trend line, and guys, let me tell you something. Support and resistance, if you trade plain support and resistance without any other perks, I'm pretty sure you'll probably be looking for another strategy to trade because it works 50% of the time and it doesn't 50% of the time. What that means is, as a matter of fact, every strategy is 50-50. There's no 100% strategy now. The thing is, if you get yourself caught in a losing streak, that's where the challenge is. If you can break that losing streak, you can survive. But if you cannot, if emotionally you cannot handle the losing streak, you're not going anywhere. You blow that account. So let's say it's a 50-50 and it happens that 4 trades in a row turns out to be the losing trade. You're done. You're definitely going to get emotional. You're going to go all in and blow up the account. It happens to everybody. So on the weekly time frame, I can actually spot these trend lines that I look to, help guide me with price direction. Now this is just to don't be like, oh, I'm relying on the trend lines. No, don't rely on the trend lines to trade. So this is my weekly time frame. I'll just go down to the daily. So basically, on these time frames, like I said, these time frames are just for the trend lines. All right, I use the big time frames to look for those trend lines. If I don't see them, I skip. If I see them, I draw them out. Now I'm on a daily time frame, and the trend lines look good. There's nothing here to adjust. I mean, it's pretty much the same story that they're telling. Unless on the daily time frame, I can see a level of support, but I would like to draw it on the 4-hour since it's more, in depth and shit. So excuse my language, guys. 4-hour. Let's go now to the 4-hour time frame. All right, so this is my 4-hour time frame. Now looking at this 4-hour time frame here, price has actually pushed away from this, and I did not take this trade. Let me just tell you guys that the trade that I took, I will come to that. So make sure you watch the video all the way to the end. I took some amazing trade. So this is my support area. I'll just draw it nice and clean. Something like this. Boom. Beautiful. You can see how quick and how easy it is. Now, what is support here? Let me just explain something with you for you guys. Right? Support is simply a price floor, or an area of price where price is rejecting impulsively to the upside. Right? If price bounces at a particular spot multiple times, rejecting to the upside, that is basically support. That's it. Now, what makes it different from demand and supply is that you don't just look for one impulsive move like this one. I call it support. No, to me, support must have been tapped twice, two times. If it has not been touched two times, that is not a valid support. It is valid when it has been tapped twice, right? So here you can see that my support zone has been tapped more than 100 times. You have 1, 2, 3, and guys, please, the more these levels get touched, the weaker it becomes, right? Just bear that in mind. Yeah. So the more you punch at something, the weaker that stuff becomes. Like it's more likely to break when it comes there. But how I use this is I align my support areas with the trend lines that I've drawn on the higher time frames. So now that trend line is like reminding me that, hey, on the big time frame, on the weekly, this is the direction where the market is going. So I want to trade within those parameters, right? I don't want to like come on a smaller time frame where I'm too zoomed in and I forget what the other story was, or what the big guys were telling me. So here I know that, okay, this is my boundary. I don't do anything. I don't do anything beneath this. I only trade above this. You feel me? So when I'm trading above this, I want to actually trade in line with it. How does that work? Now, to say these levels were formed like this beautifully, price broke above it and came back, I'll be reluctant to buy here. Why? Because this is the first, like, there's no trend line to back this up. You feel me? Let me say I have an area here. It's clean. Now, you cannot just come and be like, there's no trend line. If this low has not been created, there's no trend line because there's just one low. A trend line is created when you have 2 points touching, right? 2 points, when 2 swing highs are formed or 2 swing lows, you can draw out a trend line. Beautiful. Now, a trend line will only be formed after this one has been created. Now, let's say we have point A. This is our point A here. Please ignore this large trend line. Okay, this trend line was drawn on the weekly, so ignore it. I'm trying to look at another trend line here. So that's point A. We are waiting for point B. So here at this point, you don't trade. Even though you've identified this area here as a good support area, you still don't trade. I still don't trade because I need to align this level with something else, not just some area where price is bouncing. I need something to support or add to it. All right. Now, I will wait for this move to happen and go away. When the price has moved away from here, then I have a trend line now. This is now my trend line. I draw point A, I map it, I plot it with point B like this, and boom, I have a trend line. Now this is my trend line. This is my trend line. I'm waiting out for the third touch in order to buy. But I will not just blindly buy when the market touches this trend line next. No, I need to pair it with support, or I need to pair it with resistance. You feel me? So it's trend line plus resistance, trend line plus support. That's basically it. Yeah, so now we have some area here, price is rejecting. As you can see, the key level here is really, really high up the trend line. So if you have to take a trade, here, take it around the midpoint of this zone, put your stop loss. Make sure you're putting it away from this trend line because price will come for that trend line. Or better still, you still don't trade since your trend line, since your key level is high, is too far away from your trend line. Stay away, leave the market, right? Now, let's come to this other scenario here. Now we already have the other points that we've plotted, right? Then the trend line, the key level here has extended all the way here. Now this is an A plus setup. When you hear A plus setup, right? This is an example of an A plus. This is A plus because we have good support here. More so, we have a trend line being formed on a larger time frame. You feel me? These are the big guys at the larger time frames, and these time frames, they have a tendency to hold their levels. They are very, very serious with their levels. So the weekly and the daily and in information, they are all in one side, and they're supporting that this price should go up with this trend line. So if the market has found its way back to that trend line, the most or the least you can do as a retail trader is to look for where you can enter this market. Don't just blindly buy this trend line. I'm not telling you to go and buy a trend line, please. Make sure that your trend line is aligned with your support or resistance, whatever it is. Just make sure it's aligned to something, either of them, support or resistance. So in my case, it was properly aligned with my support, perfectly aligned, as a matter of fact. So here you can grab a sell, you can grab a buy with a buy limit. There's no such thing as wait for confirmation, wait for candle close. Nah, go on smaller time frame or go on the 1 hour and wait for no. Stop all that crap. If I go on the 1 hour here, you see all those confirmations, but the price will still sweep you out regardless. It does not care. Okay? Put your buy limit right there. Put your stop loss below your trend line. All right. I'll look at this low here. Look at these lows. I'll look at all of these things. So I'll even look at the low of this candle here to put my stops. So I can put my stops here. If I was trading this, my stops would be around here. And I'm aiming for 1:2. Perfect. But with an A plus setup like this, with my A plus setups, I usually aim for 1:3. So 1:3 will be the ideal target for me here. 1:3. That's it. Now that is how you use trend lines to agree or to be on the same page when trading forex. Now let me clear all of this out. I don't know if I can see another opportunity where I can make some explanations here for you guys. But okay, let's look at this one. Let's just look at this one, right? Now let's use trend line plus resistance. We've used trend line plus support. Let's use trend line plus resistance. Now let's assume that here we can clearly see a trend line forming. You can see point A, point B. We plot it out. We draw it out like that. This is point A. This is point B. What did I say? What constitutes a trend line? What makes a trend line a trend line? There are 2 points, point A and point B. If you have only point A, you don't have a trend line. If you have only point A, you don't have a trend. You need to have 2 points where you can plot them together. When you plot these 2 lines together, it gives you a trend line. You feel me? The market is within this trend. And the market actually knows that this trend is there. So when you use them the right way, you have better results, I promise. I'm telling you this because I traded a funded account. I am trading a funded account, right? Sorry, a funding challenge. And I started this challenge with a scalping strategy, a scalping strategy pretty much. I've been trading it for a while. And when I started it, it was not going well for this account. Like it was just crumbling and crumbling and crumbling and crumbling. If you watch my previous video, you see there. The account kept crumbling to the ground. So I had to do something. So I went back to my normal trading style. This is how I normally trade. But the reason why I was capping that account is because I was trying to get that account in a few days. I was not patient. But I realized that now trying to rush it, you're still gonna lose it anyway. So just be patient and do your thing. So when I do my thing, normally I'm gonna get it. So I'm just telling you guys now that do your thing, okay? Don't rush any challenge. Don't try to complete it in a day or something. Nah, stop that crap. Now, enough with the sweet talk, and let's complete this video. Right? This video is going to be short. We have point A, point B. Now we're waiting for point C. Point C is where we execute. Point C is where we strike. Point C is where we get in. Point C is where we take action. Right? Point C is when is point C? Point C is when the price comes back to this trend, and that's point C. Now, if we look across, is there any resistant area that we can plot, that we can, link it, or that if this trend line was not existing, we will normally treat that area as resistance. Right? If we don't have a trend line, are we normally going to trade like, let's say, this is our resistance here. Let's say price has come here once, price has come here twice, price has come here, all of this area. Let's look at this. Right? Let's say if price was all the way up here, could we have normally traded these areas without a trend line? The answer is yes. Normally, without any trend line, and we have this, clearly you can see that price has rejected that area a bunch of times. If price should come, I'll take my sell, put my stops above this week, and I'm done. I'm good. But now this trend line here is just there to confirm, is to affirm, and is to also give you extra, confidence in what you're doing. Because you could take a trade, but you're not too sure. Taking a trade when it moves in profit, you just want to close it because you don't even know what the next outcome will be. But when you have an A plus setup, which is what I'm showing you now, A plus, right? You know that, okay, this thing will push. Regardless pullbacks, regardless consolidation and stuff, you know this price is going to push all the way to your target because it's an A plus, because it has multiple confirmations. There's so many reasons why you should take that trade. You're going to hold that trade. But when you take a trade you're not too sure of, trust me, when it starts moving, when it goes in drawdown, you're so confused. When it gets in profit, poop, you close it because you just want to get out. You just want to escape that, Yeah. So we have that. But now we need extra confirmation. So we look for a trend line and we see one, which is here. Perfect. We align this and we know, okay, we're good. We have a good setup, and I can go do whatever I'm doing. I just place my limits right there, and I know that I have a trade. I'm not saying that, 100% I'm going to win it, but I'm just saying that if price gets there, I have a higher chance of making it out of that trade. higher chance, like there's a big chance that I'll win. Beautiful. Now what do? I just come there. When I spot this, I just put my limit. I don't really care. I put my limit, put my stuff on top of this wick, guys. Please look at this wick here. Pay attention. Let me show you guys this. Wick. Keep your stops on top of it. Stop on top of the wick, like that. Perfect. Now I'm aiming for 3. A plus setups are always aim for 3, guys. 3.05. That 05 there is for spreads and stuff. Commissions. So that is it. That's my trade. You see how the trades do work? They work in line with the trend line. If you're working with the trend line, it's like a citizen working with the states, like you're working with the police to get something done. You know that okay, you're on the right side of things. You feel me? Nothing can possibly go wrong. Like that's it. That's just what I'm saying. It's really, really good to work with the authorities. So now the authority here is the trend line. Why? Because this trend line, these are things that you, even if you go on the bigger time frames, you see them. They're there. So if you see them there, you know that okay, this is a valid something. This is a registered something. Like it's legal for you to do it. It's acceptable. It's acceptable that you do it. So don't just blindly trade. If you watch Nick Shawns' video, if you're not a professional support and resistance trader, those videos will not be of no help to you. But it's not like he's making crap content. No. But his content is not directed to complete beginners. That's why this video is here. So if you're a complete beginner, show appreciation to this video. Like and comment, subscribe, and if you want to reach me, there are links down below. If you want to talk to me, if you want to get into my mentorship, there are links down below. If you want to get to my free Telegram where I post some of my results, you can check it out as well. Nice. Now let's see if we can still see another trend line. First, step 1, get a trend line. Step 2, look for a key level. If you don't see any, get out. Right? We have let's say point A here, point B here. Let's stretch this out. Nice and clean. Now, you might want to let me lean this way towards don't. Just always make sure that, because if the price is rejecting a particular area, don't always pay attention to only the weeks. Don't put your stop your trend line on the weeks like that. No, you're not getting the trend line. The trend line is the candles. It's the candles because the market did not close out. If the market penetrates it with the candle, meanwhile, then it closes back with the wick. The market did not succeed. That means the market tried, but there's an opposing pressure pushing that price back, stopping the market from closing out of that trend line, right? The big guys are reminding them, hey, this is your boundary, don't cross it. And I'm like, oh, sorry. And they pull back. Now, this week is just evidence that the market tried to cross, but it did not. There's like a footprint for you to come and see that price actually attempted and failed, right? Ooh, I speak too much. My chest hurts. I look kind of tired. I'm an old man, guys. Don't look at me here thinking I'm a kid. I'm an old man. I'm 32 years old. For real, I'm 32. Come on. Okay, so we have point A. We have point B. Once you have your trend lines, you look for a key level. You look for an ACP area, whatever you want to call it. Beautiful. ACP is basically areas of condensed pricing. That's another concept that I teach, and it works. Then we have this beautiful support area here that we can draw it out. Now, this support area that we've just drawn, right? Is it in line with the trend line? Yes, it is. You must not necessarily touch it before you know it has touched it. I mean, it's just like one pip away from touching it. So it's perfect. This is our point C here. This is where we execute. This is our trade. How do I get in this trade? Very, very simple. I place my sell limit right there. I put my stop loss approximately where I feel comfortable, because this is a trend line. The market should penetrate it. It shouldn't go this high. So I'll just keep my stop like so. That's how I put my stop loss. It's completely personal. There's no specific way of putting stop losses. It's personal. But when putting your stop losses, bear in mind that the market is like a living thing. It breathes. So if you're putting your stops too close, when it wants to breathe out, breathe in, it will stop you out before it even breathes out. So you get it? Nice. All right. So that's my trade right there. This is an A+ setup, of course. I'm taking 1:3. and boom, straight up. One price leg. It's not like comeback retrace. No, one price leg. Do you know why? Because these levels have power. These levels have order sitting there. You're not the only one trading here. There's millions of people. There's order, there's liquidity, there's volume. That's why when it taps you, one price leg, one price leg. Same thing here, one price leg. Beautiful. Now, after we've covered all of this now, I think we should go to the next chapter of this video, which is how you or what you should expect. Right? This is completely open, guys. I didn't prepare anything for any videos. I'm not a content creator. I'm an actual forex trader, for me. So I don't really have time for editing and cutting videos and stuff. I just take one take and I freestyle it. So yeah. And yeah, this is my bedroom. So I don't really have an office. Like I said, I'm not a content creator, I'm just a trader. I'm here to, make awareness, create content. And I also see that, yeah, doing this stuff can actually give me an extra buck because, I mean, if I can make extra buck, why shouldn't I? It's not like I'm a millionaire. I'm not a millionaire yet, but I'm hoping by next year I should be. So you guys should be here. I'm using this like I make my videos here, document my stuff. And when I be a millionaire, I'll look back to these videos. You all be like, yeah, I was there. I knew him when he was broke and shit. I'm not broke, so don't say. Come on. Come on. All right. Now, let's look at now let's forget about A plus, let's forget about trend lines, let's forget about support resistance, right? Let's just draw out our key levels. Let's say we have our level here that we're looking to trade. Now, I want you to look at something here. Can I do this? Let me look at this like so. Okay. I want to explain something here for you guys. Let me go on the 1 hour time frame. Very important. Because when people get into trades, when they open their markets, when they open a trade, like poop, they're in a trade, right? They expect that trade to just leave from where they've entered straight to their take profits without any form of. I know that's what the market does. The market does that before. Now, I want to tell you guys something. There are three phases in this market. You have a consolidation phase, you have the uptrend, you have the downtrend. Then you have three kinds of market conditions, right? And there are also three, I don't know how to call it things, IT students, they like there is accumulation, there's manipulation, then the distribution, all of these things. But I don't really consider that because that's another concept. But I just want to tell you that most of the times when the market enters, it will not just shoot away. It will actually accumulate price before it delivers it. Like it will just do this. It will gather price like this. After it gathers it, it shoots it one direction. Gathers it, it shoots it one direction. It gathers it, shoots it one direction. It gathers it, shoots one direction. That's how it works. So don't just enter and expect price. Sometimes it will, but that's like 1 out of 5 trades. That means 4 trades will consolidate before going to your take profit. So be patient. Right? And also we're trading on the 4 hour time frame, which means we tend to hold trades for a very, very long time. Now look at this trade, right? Let's say you are in a sell position here. Enter here, boom. And now the price just immediately starts going in your favor. And you're like, wow, nice, I'm enjoying this. All of a sudden, boom, a mighty opposite candle just appeared. One impulsive candle. This is called an engulfing candle. It just engulfed the previous candle. And you're like, wow, the market is rushing back to my entries. And this is devastating. This creates anxiety. This is the worst thing any trader wants to see. Except for the pro ones, because me, I'm used to this stuff. And when I see like this, I'm happy. I know that, okay, it's coming back for the second touch. And when it starts rejecting the second time, and I'm good. If it doesn't reject the second time, you're done. Right? So what I want to see, or the point I'm trying to prove here is anticipate or bear in mind, or just have this at the back of your mind. Every time the market approaches your ACP or your T or your key level, the market will do this before dropping. All the time. The market does not just tap and just disappears. No, it does this sometimes even 3 times before dropping. Now let's count. You see the market enter here 1, it dropped, came back 2, and it disappeared, right? Okay, let's come this way. Same thing here. Look at it very well. First touch drop, second touch drop, fourth touch drop, fifth touch, then drop. You can see that? It's terrible. It's terrifying. Because imagine how much profit you are in at this point. Then all of a sudden, boom, 0. Then boom, straight to your take profit. That's how trading works. First touch, second touch, third touch, disappear. It works everywhere. Everywhere is the same thing. Even this setup that I was showing you guys on the 4 hour time frame. Let's assume that this is your support area. You're buying here. First touch, second touch, third touch, then disappear. It's like that everywhere. Everywhere. Here, the same thing, right? Price enters, you're buying here, it goes up, comes back before disappearing. Go anywhere you see it, everywhere you see it, it's there. Same thing here. This is it. First touch, pull back, second touch, disappear. So always wait for the market to tap at least 2 times. Don't just, on the first move, don't count that as profits. Just be like, the market is doing its thing, it's coming back. Once you have that mentality, you won't stress too much. Because on the second pullback or the second push, you're good to go. If this video was beneficial to you in any way whatsoever, smash that like button. Leave a comment below, down below. If there's any topic you want me to cover, comment. I'll read your comment. I'll make a video for it. If there's any question you'd like to ask me. If you want to talk to me, there are links down below. I will lead you to Telegram where you're going to message me directly. I also have a free Telegram channel. Again, the link is down below. I have a course and I offer mentorship, one-on-one Zoom calls on live meetings where we're going to break down charts, take trades, and advise you on a lot of stuff. That will actually help you. Chat, all right? It doesn't really cost much. I'm just, gathering, putting a team together. I don't really have a team that much. I have like a few traders that I'm working with. But adding you to the team will be my greatest pleasure. I'll see you in the next one. My name is Gisle once again. Thanks for watching.